Hello everybody, Brian here for quantlabs.net. Today is Wednesday, September 4th, 12:24 a.m. Eastern Standard Time. Okay, so I'm about to show you a bunch of reports. We know that the markets have had losing weeks. Literally, I'm going to show you some things that you should be investing in. If you're interested in this stuff, I'll be showing you a variety of Excel spreadsheets as well as Word documents. These are generated through this service. Called the Quant Analytics. We focus on crypto as well as Forex, and the data I'm going to show you is from awareness CFDs, but these are the poor man's gateway to the futures, commodities, markets. Plus, if you want to know how to write bots or automation via Python, you can learn how to do that through this course here. Under all the Python courses, there's really only one. They'll give you access to that, so you can do that here. That's all under the quantlabs.net store. All right, so let's go to our friends. So in here we have these files get generated every hour while the markets, and namely Oanda, is open. So it's really the servers are out of Singapore. They start Eastern Standard Time around 4, 5, 6 p.m. Eastern Standard Time on Sundays, right up through till about late Friday Eastern Standard Time, same time frame as New York. All right, so as I said, we've got some files here. I'm going to show you first the Word documents and then the ranking Excel spreadsheet. I've shown this in the past, but this is really critical. We know that market's been down quite a bit over the last month, but these are doing really well. And I'm going to show you the shorting opportunities that this report show. There's a bunch of reports here. I'm going to actually show you the returns that you could get built around this. So let's have a little fun here. So these are our shorts. First ones are oil. Oil's not been doing too good. These are the variety of charts that you can get. So these are all the way back to about a year, I believe. And these are the moving average cross signals, the overall trend, Fibonacci levels, and then the different over 180 trading days. And we break it up by 90 and 30 days with the usual bar charts, candles, as well as volume, RSI, and momentum. So for shorting, all I care about is just showing you what's going on. For the shorts, we are getting Brent crude oil as well as WTI, and those are all short calls based upon this. So that's what we can expect, and here we can see why. Last 3 days has been going down with these big candle wicks as well, which usually mean, from what I've seen, I've said this many times before, as you can see here, here, and now here, these are classic reversals on a daily time frame. So be aware of that. I've been seeing that, and that's pretty high accuracy on those extreme wicks you get on candles, specifically around day time frame. All right, so let's check out some more. Let's check out some long calls. There is none. Doesn't stop there. We've got two other Word documents. We are able to filter on based on trend as well as on volume. So if I was to show you this one here, Word document, these are longs based on volume. And these are really important. The only one that's coming up somewhat is NASDAQ. I think this thing is definitely running out of gas. That's why I like these Fibonacci levels, because you could see it's clearly overvalued. If we could see it in the RSI, yeah, see the momentum's starting to putter out here at 0, and it's starting to point negative on an intraday level. So I do think the U.S. markets are not doing well, but there's one more report I could show you, which is the best one of them all, based on trend. Now, these are the reports that you should be focusing on and you should be getting these kind of returns. Now, no matter what you trade, here is U.S. Treasury 30-year. You can see these kind of moves from roughly, let me just blow this up, roughly, let's say, since June, about 150, and now we're at 165. So when you factor in that kind of move, what are we looking at? Just roughly 165. You know, you're looking at about a 10% return over that time period. Now you move on to the next instrument here. We are looking at the 5-year Treasury. You can see here it's been rising quite a bit, specifically what time period. Again, roughly around June. So if you look at the current move over the last, since June till about now, and it's been nothing but up. Some big charts here, or sorry, big candles you can see here. Here, you know, roughly August 1st, when the market started really tanking and the panic started to set in. You're starting to see moves about, let's say, 115 to 120. Again, what are we dealing with here? What kind of returns over the last two months, maybe 3 months, from 115 to 120 approximately. Let me do that again. So you're looking at about 4 or 5% move, roughly. And there's some bigger moves, like here on the 10-year UK gilt or bond. That's a big move. Go down to the, let's say here, roughly even since July up to 136. From here to here, how's it been doing? And again, these are a number of, so over the last, I guess 2 months, maybe 6 weeks, we're looking at roughly about a 12% move on the UK Treasury. Now these are safety havens, safety plays, you know, and these are the kind of returns that I would expect you to get if you were using these kind of reports, because they are just using raw data from Oanda. And here's another interesting one, is XPT, which I believe is platinum. Look at these big moves here. Right there, that very last one, that's a big move up. Right here, last 3 days, I'll show you that here. So you're looking at about 850 all the way up to 960 just in the last, let's say, week. So you got 1, 2, 3, 4, 5, 6, 7 bars. So let me just get the pricing here. This isn't last week again. Let me just repeat that. So let's say from 860 all the way up to 960 in a week, 11% move. Okay, let's continue to the next one. This one's not as strong. I believe that's silver. But again, you see those big green candles for the last week or so. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. And let's say from 17 all the way up to roughly 19 and a half. 17 divided by 19.5. Let me just make sure I got that properly. Divided by 19.5. So you're looking at roughly a 13% move over the last week. Again, here's another Treasury. Okay, and what kind of price moves? You can see right in there, these 3 bars, just big, massive moves. 127 to 132. So roughly, it's not as big. That's a 10-year. So 127. So it's about a 4% move. And that's in the last week. So China's a little choppy here. And that's pretty well it, I believe. Oh, and Australia as well. So even from here, 5,500 all the way up to 7,000. But you can see here we have some big down moves. So Yeah, so you're looking at nice steady move up. So even if you go back to June from let's say 6,200 to 6,800, you know, again, 9% move roughly. So, you know, when you look at the markets, how they've been moving lately, you know, down a little bit here, 1%, 1%. Let's check out what's that? The S&P 500, GSPC, and we'll do the same kind of comparison and how it's been doing for the last 3 months, let's say, or a month even. Let's see how choppy it is at 2,800 all the way up to 2,960. Let's do this 20. So from June, roughly, we're looking at 2774. But look at, since July, it's come off at 3,000 all the way down to 2,900. So it's lost, just see here, how much it's down. Let's say 2,900 from the peak of 3,020. So it's down, you know, maybe 4 or 5%, but I've just shown you some of the classic trades, assets that you should be, just in the last week, I've shown you a couple that were up 10, 15%. And if you're not getting those kind of returns, you should be firing your manager, your wealth fund manager, whoever you're using. But there was opportunities out there for sure. Other than that, just wanted to show you that, and you'll be able to get all that analysis if there is an interest from people on the Quant Analytics. But do understand, we're about to go live with the trading signals for the crypto and Forex, and I'll be showing how that works in greater detail, and that's going to make the service much, much more valuable. And probably going to be looking at a 50% increase over the next week or so. So if you want to get in on this now, do it. Save yourself quite a bit, and you'll be permanently grandfathered in. If you are interested, just come under the store, pick off the Quant Analytics, and you can subscribe now on a monthly basis. On that, hopefully you've enjoyed this video. Thanks for watching. And one last thing. All right, I forgot about the CFD rank. So this ranks everything out there. I've shown this before, nothing exciting. We have our columns here with the signals built in, and I'm going to do a data sort on usually trend, volatility. I could also use using standard deviation, slope as well. But let's just focus on the trend, what have been the stronger performers lately. Where's my sort? Data sort, and that will be column momentum, column J. Okay. Sort by values. Oh, that's cool. So we want momentum. So we go okay. So here you go. I think I did it in reverse. Give me a second here. Let me just do that again. Order, we want to go the other way. Yeah, so we want momentum. Okay. So you can see here what have been the performers over the last little bit. Actually, I'll just start down here. This is in order based upon the momentum here. So we are looking at NASDAQ, Deutsche 30, SPX, US 30. So the indices are, and this is very long-term performance. So it's still useful, but I think it goes out a year, but the reports are a little more accurate. But you can also get a general idea of which ones are not performing as much here. But like natural gas will come back probably in the next couple of weeks, and performance from there. But just want to show you all that fun stuff that this does include, this ranking file. So you can, as I said, you can play around based upon standard deviation, which is really volatility, momentum, slope, volume, and which is traded by what, and as well as some other analysis as well. Hopefully I'll help you out. We shall talk to you later. Have a good day.